Oh, so Chris Armstrong. No, Brian. That's the one. We'll start again. So Brian Armstrong thinks Bitcoin's going to get to the billions by 2030. Well, ladies and gentlemen, just go and buy Bitcoin. You're done. You don't need to even listen to what I have to say. Just buy it and don't worry about nothing. But we got a little bit of a problem, man. What is Bitcoin doing? We've got this tug of war between the bull and the bear. Man, I hate those terms, but I don't, because I know we have to rely on them to know where retail's at. Welcome, ladies and gentlemen. We are back to the New York Lives, and we have such a week packed with information. Did anyone witness the madness that unfolded on Friday when Donald Trump said reciprocal tariffs? Ladies and gentlemen, this story about Trump, okay, it's getting very, very serious, and I urge you all to be so careful when you're trading. Your goal really is to just try and scalp. Those of you who are the spot traders, just get ready for a bit of a wild ride, because anytime Trump decides to say tariffs, the market doesn't like it at all. You can see what's going on across the board. He's getting he means the business with the tariffs right now, especially when it comes to steel. Most steel companies on the S&P are starting to pump up really, really well, which is what is leading the NASDAQ and the S&P to moving up. But guys, at any moment, Trump could hit X and start talking about tariffs, and then the market will give and it will take away. So what are we talking about today? Well, listen, we've got a week packed of information. We got Powell speaking, good old CPI. We got core retail sales coming out. And of course, whenever Trump decides to start talking about the tariffs, that's going to be put into the calendar. Well, it's just impromptu. He's just going to be like, yep, let's talk about tariffs. And that can really rock the market. So guys, just be very, very careful when you are trading, because Friday was an example of that. Now, moving on, what we're going to do? Well, we're just going to dive into what's going on with Bitcoin, because there is tug of war between traders. There is a bearish sentiment, but it looks like Bitcoin's about to bottom out and get ready to make a nice move to the upside. And there are conflicting stories about it all. We're going to look at the Coinbase Premium Index. We're going to dive into this funding rate. Well, actually, to summarize it all for you, negative funding rates usually imply that things are starting to change and the potential bottom for Bitcoin is actually being formed. So we're going to get into the price action of Bitcoin. If you're a day trader, that might serve you. And we're also going to dive into what the story is for the holders and what you guys need to be prepared for when it comes to macroeconomic data that doesn't bloody work anyways, and all economical theories just go out the window with the way this market is operating. So if you are new to the channel, hit the like button, man. It costs you nothing. It's just a little bit of an exercise of your finger, and then just tap it. It costs nothing. Unless you want to pay for something, become a platinum member. There you go. So work out which one works for you. Like the stream. It costs you nothing. Let's get with the program, ladies and gentlemen. It's good to be back. Here we go. So, Bitcoin. Probing that 97,900 zone. So let me just get with the flavor and what I'm talking about. Check this out. Analysts see sign of a crypto market bottom amid bearish sentiment. So what do we mean by the bearish sentiment? Well, I'll tell you one thing right now that is not bearish at all, and that is this dearly beloved ETF. This balance keeps on going up. Something is brewing, guys. And is it because investors are starting to seek the haven of Bitcoin? Are they starting to see the idea that Bitcoin isn't really going up or down? So maybe they think it could end up becoming a store of value. And that's a title that Bitcoin has really, I mean, once it does proclaim that, I mean, how many of you are of the belief that Bitcoin is a store of value? Logic says it is, because if I've got £97,000 and I want to, or $97,000 and I want to put it into Bitcoin, and I can go and buy it for $97,000 and leave it there for a bit. I do set myself up for a lot of volatility with crypto, but that's the thing. It's on this, is it store of value? Is it not? How long do you determine the store of value for? If I just want to get rid of fiat for a few moments and put it into Bitcoin, I can store my value there. So that's something that could be coming into play with this ETF. And the investors are starting to believe maybe now's the time to start loading up onto the Bitcoin ETF, because I ain't seeing no balances being removed. I mean, Grayscale's just been moving money around. You can see it's predominantly just started to start playing this moving of addresses, and so is BlackRock as well, which could be a treasury management process, like what they say when they do want to move Bitcoin out of the ETF, like they did last time when BlackRock was at around a 300,000 balance and it dropped down to 180 and everyone was like, oh my God, it just rug pulled us and what have you. And then it went straight back in. So treasury management processes that they might have where they say they want to move Bitcoin to a certain wallet for a day or so. Who knows? It's all about maybe staking. They might lock in some yield. Who knows? But ultimately, as long as this balance retains itself and stays high, then we are all good. So going back into this story right here, people are mixed with what's going on with Bitcoin, okay? If Bitcoin's following the stock market, well, then let's just go and have a look at what's going on the stock market, because the stock market hasn't really been doing too well. It's been all right. I mean, let's be honest. 77% of all the companies that have declared their earnings have smashed their estimates. They've done really, really well. Now, you've had Google and you've also had, of course, who else was it? Apple. Yeah, Apple, not Apple, Alphabet, okay, and Microsoft. They didn't really do too well with their earnings. Meta smashed it, all right? So there's a little bit of a mixed story with regards to AI right now, okay? But Nvidia is going to be declaring its earnings in a couple of weeks' time. So I think a lot of investors are going to be waiting for that. Going into the stock market, you can see as of Friday, we had 6 distribution days on the NASDAQ and 3 on the S&P. What's a distribution day? Distribution day is a number of selling that is happening from institutional investors, which means getting rid of stock fundamentally, okay? And then you've got 3 distribution days on the S&P. So there's not that much selling on the S&P, but there is more on the NASDAQ. But given that the NASDAQ is way more volatile than the S&P, what can we use with this information? Well, when we go into the charts themselves, we can say to ourselves, all right, where is this selling actively happening? And this really does serve you when you do pay attention to it, because it's going to lead you into believing whether or not the market is at the top. Now, you can see here, bottom right, you can see we've got these purple bars, which tells us the distribution days are mounting up all in one area. Now, is this buying the dip story? Well, think about it. You've got inflation data coming out this week, and they're already tipping that inflation is going to start coming up, primarily the core price index. They're expecting a reading of 0.3%. Now, because of what's going on with Trump and his tariffs, it's going to be one of those where this is going to actually impact inflation massively, which could then make sense as to why there is a lot of investors selling at these highs right now. NASDAQ hasn't been able to take its all-time high, except the S&P, and it went on to make its 53rd record of hitting an all-time high. But since then, it's not really done anything, and it's managed to stay at these high levels. So realistically, the reading that's going to come out this week from the CPI, if you go into the calendar, you can see on Wednesday, we're going to see a reading of 3.3% on the core price index itself. This is the primary gauge that the Federal Reserve uses to understand where they are with inflation. Then you get the CPI year on year, which is expected to come in at 2.9. When we have a look at the readings themselves, you can see we haven't gone anywhere beyond 2.5 or 2.4, and it just seems to be bouncing up and down, and that is why they coined inflation as sticky inflation. To top it all off, you then, of course, got the labor market from last week's reading with the unemployment rate coming in lower, and then you had less people being available for work, but then at the same time, you had more people claiming benefit, but then you had the job openings report coming out suggesting that there was also less work, but then the ADP non-farm employment change came in and showed that there is way more work available. What the if you were to sit down with economists, right, and say to them, let me tell you, I'm from the United States, right? Listen to my economy. And they're there listening to you say what I just said. They're going to be thinking, what's going on? What is actually happening? And your interest rates are what? Yeah, they're still high. And when you're holding them, yeah, we've got inflation, but we do want to cut. So is this economy really working or not? But the Fed uses the labor market to determine if the economy is doing well. Because if there are people in work, that means companies are employing. That means they're paying. That means people that are getting paid are going out and spending their money on Taco Bell and enjoying their life. And that circulates money. And now we've got this story about the tariffs themselves. It's going to start putting things into a little bit of a story. Going into it, it says here, the futures are rising because steel stocks get a tariff boost. Because Trump is just going to be like, that's it. You're done. We're going to be putting tariffs on all the major commodities. I'm waiting for oil tariffs, even though he has done that to Russia. But it says here, U.S. steel jumps 15% in pre-market trading after tariff news. Now, the S&P itself is made up of a lot of commodity companies and, of course, transportation companies. So any news about oil that might come into play get over to oil-based stocks, get over to companies that will be impacted by high oil prices or not impacted by high oil prices. Mainly oil stocks that are in exploration, manufacturing, refinery. Those are the stocks that are going to start seeing the benefit. When you start talking about steel, you start talking about oil. And when you start combining those two together, you then have a commodity run. Okay. And we already know what one commodity is doing right now. Just quickly putting it into perspective. We've got gold. Well, gold. All right. How many of you actually trade gold? This is the question. I need to know. How many of you are actively trading gold? Is this actually working? Guys, are you in the chat? Is everything working correctly on this live stream right now? Can you just start blowing up the chat? Here we go. Oh, I can see you guys commenting. Okay, cool. So I'm just going to give you a little bit of game, and you may have heard me say this before. And if you are new and you haven't heard about this, then check it out. So if we just go over to this chart over here, and we just type in gold, all right? We look for the gold hedgers position index. Now, this is very important for anyone that does trade gold because it does serve you if you have an understanding about how investors are or hedgers are preparing themselves, okay? Just to put it into perspective, whenever price of gold, or should I say, whenever this blue line gets over this green line, that is where hedgers or investors or hedge traders, okay, are plowing into gold. All right. We all know that when they buy, prices are dropping. That's when they start buying, and then they start selling as prices rise. Now, take this concept for cryptocurrency as well. When I'm going to get into Bitcoin very shortly. So if you are new and you heard me talk about Bitcoin, give me 2 minutes to explain this concept to you, because gold and Bitcoin, they're both commodities, and Bitcoin is a commodity. And if you don't think it is a commodity, there's a supply, thus that makes it demanding. It's a commodity. Anyways, whenever it goes above this green line right here, it tells you that hedgers in the game of gold are actively buying gold. All right. Now, I've said this before. Hedgers prepare themselves for an event so that when the event starts to come into play, what do you see in the news? Gold is at an all-time high. That's when retail is buying. Hedgers are selling. Okay. Whenever it goes to the red line, it tells you that hedgers are offloading their positions. Okay, now, so let's just go and put that together. Where in this chart have hedgers actively got involved in gold? Well, consolidation. Technical analysts will be like, yeah, man, it's just consolidating, get ready for a breakout. All right, cool. But here is where hedgers are buying gold, okay, on the pullback, right? Here is where they're buying, hedging, okay? Here is where they are hedging, right? These areas. And if you notice, for every area that gold has actually managed to clear, it's come from a consolidation, because these hedgers are coming in, okay, and preparing themselves for the next event that's going to lead investors to buy gold. Right now, investors are buying gold. Safe haven. You go to news articles, they're all talking about gold is the safe haven, okay? What's going on right now with gold is investors are buying it, retail, but hedgers are actively selling it. So they're hedging themselves against the next event. What's the next event? Well, when the interest rates of the US dollar start to come down, gold in principle should be going up. But what we're seeing is the dollar itself showing still strength at 7% appreciation, okay? And gold is still going up. So even though there is an expectation that interest rates are going to come down, right now, that's not the case. But investors need to start seeking the safety of seeking the safety of gold because of the uncertainty of what's going on in regards to tariffs. That's why gold is going up right now. So when you start seeing gold pulling back, because everyone's like, oh, Tino, gold has just taken the wave, or it's taken the Fibonacci, it's taken this. Listen, it's for me in these times right now, okay? Hedgers are thinking about the prospect of uncertainty. So whenever gold comes down, they are buying up gold in preparation for the next event. We've had this event, okay? Look, gold has just been marking up, and they've now hedged themselves, okay? So now we're going to be seeing gold. In principle, it may start to pull back ever so slightly, but it then could still resume its move to the upside. I'm still looking for $3,000 gold. I've been saying that for over a year and a half now, okay? But what they're looking for right now is we're looking to see if hedgers are going to start getting involved in preparation for the next event, which effectively means that gold will come down, go into a consolidation, and then start to make a move to the upside. What you can do is you can go back in the charts and see when gold starts to climb, what is going on macroeconomically speaking. And then you'll be able to marry the two together and say, okay, what's the next event? Well, the only next event that we've got coming into the markets is the tariffs. And we've not had anything concrete about the tariffs. It's just Trump throwing out the words tariffs and reciprocal tariffs. Everyone's going to get hit. Well, I ain't seeing no tariffs, my bro. And you know, it's there's nothing in concrete set yet for the market to say, okay, this is going to be a problem. It's going to lead to inflation. And I think Trump knows it's going to lead to inflation, which is why he kind of pulled back on the idea of pressurizing Powell to not cut the interest rates. I think he's like, just keep them as they are then. All right, just don't do anything. He knows he's going to cause inflation to go up. But if you've got a strong labor market that's absorbing it, it doesn't matter what inflation says. As long as oil keeps on staying low, even though oil is trading around the $71 mark, you kind of like say to yourself, all right, then I'm trying to kill two birds with one stone here, sacrifice one for the benefit of another, okay? So those of you that trade gold itself, just be prepared. When it's going up, the hedgers are getting rid of the exposure. They've hedged themselves. When it pulls back and you're buying gold at these lows, that's when you're in line with the hedgers, okay? And that, in my opinion, is the best time to be trading gold, when the hedgers are actively getting involved. Why? Because you'll see price consolidate up and down, and that is when you're going to be able to say, yep, I'm with the hedgers, and then you're having an expectation that price is going to expand to the upside, where the hedgers are going to start selling into the likes of you and every other person that sees gold as a safe haven. I see gold as a safe haven, but I play gold for a longer period of time. So these up and downs have no relevance to me, okay? I'm just looking for gold, $3,000, happy days, all right? Now, let's get into a little bit of Bitcoin price action. What's going on? Bitcoin was pumping a minute ago. I saw someone's comment saying Bitcoin to the moon, and now it's going down to Uranus, bro. Okay, so where is Uranus in terms of astrology? Where is it? Above? Is it below the Earth? You get the idea. Anyways, let's have a look at what's going on. Here we go. So, yeah, this is Brian Armstrong, Bitcoin to reach billions. Yeah, cheers for the projection. That's a projection right there. I think that's the best one. I ain't heard anyone say Bitcoin to billions. I know Sailor's talking about the orange Bitcoin going into 13, 14 million by 2049. But by 2000, bro, that's in 5 years' time. Do you understand that? 5 years' time, Bitcoin's going to reach billions. That's if no one sells it. No one. Then you get your supply shocks and all that madness. But anyway, let's have a look at what's going on. Here we go. So this is the Coinbase Premium Index for my holders to understand. Is now a time to buy La Bitcoin. Every time it goes to this green thing, all right, anytime it goes above here, retail comes to here and then says, oh, look, everyone is buying Bitcoin because it's green. Wrong. They were buying it over here, guys. Okay, that's when Bitcoin was at the lows, all right? And that's when Bitcoin reversed because everyone was selling it and people were like, I'll take that Bitcoin, thank you very much. And that was over here. And if you were trading the hybrid system, you will know that there was a red vector candle recovery region inside this zone right here, which is what led Bitcoin to go down to only come back up. Where was it? Let's just have a look at it. What zone? This one right here. This nice drop to the downside. All those bids were being picked up, and then the market opens and says, yippee-ki-yay to the upside. Happy days. They made their money and bounced. Now, looking at Bitcoin right here, guys, you can see it's made a nice little move to the upside. I mean, there's nothing coming into the calendar in terms of earnings. We go into the earnings this week, and we don't really have anything to be concerned about. I mean, McDonald's, it's going to tell us if people still want to consume McDonald's. All right, cool. I mean, it's a globalization company. It's massive, but we don't really have any concern regarding news for companies. It's only the household names like Coca-Cola. Who else have we got? Cisco. I'll probably pay attention to when Cisco Systems is declaring its earnings. But other than that, the week itself doesn't really have anything to be concerned about. We got a little bank coming out with some earnings. Where was it? Oh, that's going into the week after. So I'm not really fussed about this week in terms of earnings announcements. Nothing that's going to really move the market or have a concern for me. But going into the calendar, we know that we've got Powell speaking in tomorrow's market at 3 p.m. UK time. And then we've got Wednesday CPI, and then Powell's testifying again. And then you've got, of course, core PPI. So it's a relatively light week across the board in terms of data. And most of the data is coming out, just before. So really Wednesdays before the market opens. So we're going to have a decent reaction by the New York session on whether inflation's going up or down. And this right here is going to pretty much solidify if the Fed's going to keep the interest rates stum. I think what's going to happen is once we know where we are with the tariffs, that's when investors are going to start, or should I say the Federal Reserve is going to start saying, you know what, we're going to keep interest rates high or we're going to keep interest rates low. We're going to start cutting itself. Now, going back into this, the Coinbase Premium Index right now is showing a reading that is positive. So that retail's looking at this saying, yep, start buying the Bitcoin. And if they bought the Bitcoin today, they'd probably be in a little bit of a tricky situation because it's now starting to pull back and probably will pull back quite aggressively at that. Going into the liquidations of Bitcoin, you can see that they've been attacking the liquidity down here. Some longs got liquidated last night in the Asian session. Nice little sweep to make a little reversal. Commit the guys who were in the shorts to the downside, make them think, all right, that's it. Let's start going long. They've started to go long right now. And then Bitcoin's now starting to pull back and giving back most of what this pump is. Okay. Like I said, just be very careful. If you're trading Bitcoin and you see a green candle and it's pumping, 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 do something about it, man. Take something off the table. Don't leave it in there. Get in and get out. I've been encouraging the guys in the Platinum membership to just make sure that you're scalping. Try not to hold on to positions for too long, but that leads me over to where we are with the holders right now. So if you're a Bitcoin holder and you want to know, Tino, should I be buying Bitcoin or not? I mean, look at this price action, man. It's dead. It's absolutely dead. Now, people are now saying that Bitcoin, this is the bottom. And you know what? I hope it is the bottom right now. And I hope Bitcoin can actually make a move. But hope is not an indicator. And it's pointless coming into the markets with a hopeful expectation. We need to trade what we see and we need to understand what's going on. We know that there's tariffs around and about. And we know at some point Trump's going to mention them again. We know the market reacts to the tariffs very aggressively. Just look what happened to the NASDAQ on Friday. So we know we're going into a week with tariffs. It says here that we're going to be listening to Trump. Here we go. Trump unveils steel tariffs. So it's obviously hitting the news right now. And then, of course, it's all going to be benefit to energy companies, commodity companies. Says here, Trump's intention to announce a 25% levy on steel and aluminium. Monday already added to intense sentiment before Federal Reserve Powell Jerome's semi-annual congressional testimony. And it's just, look, everyone is going to get impacted by these tariffs. So if you are in risk right now as a holder, you've got to be prepared for volatility. Here are a couple of zones that you want to really be paying attention to. If we go over to the actual bid and the offers, you can see that there's quite a few bids getting stacked up down here. So if I zoom out, and I always like to do this, always like to zoom out on this chart just to understand what's the relationship of price right now. Now, you can see here, we have got two very interesting zones right now. We just had a big order down here, 24 million at 70,000. We also have that 69 million at 78,000, okay? Now, the idea of Bitcoin, when we go back to this story here, that there is a crypto market bottom and bearish sentiment at the same time, quite frankly, Bitcoin can drop all the way down to 84 and your bullish sentiment is still in play. It really is. And even if it does drop to 84 itself, that is still a valid bounce zone. It really is, okay? But what you've got to be mindful of is Bitcoin is not really clearing out the highs. You've got 1, you've got 2, 3, 4. They're all lower highs. And it's not really giving us a follow through yet. If you look at price action over the last 1, 2, 3, 4 days, Bitcoin was doing nothing. It's just spiked up to come down. And because we've got this spike up, come down story, that does kind of keep investors at the sidelines thinking, what if this spike up's going to end up leading Bitcoin lower? We know that the book is geared towards the bids because you can see right there, they are plowing into the bids right now. But what's keeping investors, in my opinion, what's keeping them committed is the fact that you've got the balance of the ETF holding out. So as long as there's accumulation in Bitcoin, then whatever you see happening with Bitcoin in these ranges, whether it's up or down, there is going to be a bold move happening with Bitcoin. But I think it's only going to happen once we know where we are with the tariffs. That's what I think is going to happen. Once the tariffs come into play and we know how long those tariffs are going to be in play for, because remember, Mexico had a month extension. That could mean that it's going to start coming out again with that story. So we can assume that in the future, the volatility of Bitcoin could end up being lower if the market is going to react to these tariffs. So as a holder, you've got to say to yourself, where would I be loading up on Bitcoin where I can see in the chart that it's going to have a reaction to a macro event? A macro event would be down here, 91,250. Another macro event would be down here, which would be the 89,269 zone. You might look at the charts and be like, you know what? It only makes sense that Bitcoin moves up because moving averages are flat. All indicators are showing price to go to the upside. Funding rates are negative, which means that we should be seeing price going up. Yet why doesn't Bitcoin go higher? it's a case of whether you are committed to say, yep, I'm ready to load up in this area here, because even though you might see Bitcoin move up from here, how far will it go? I don't see Bitcoin really moving up too much until CPI data comes out, all right? Because if CPI data comes out, and this would be the ideal scenario, if inflation is still a problem, that really should be undermining fear. Why are investors not going into Bitcoin? Why is it when inflation comes in higher, the dollar goes up, but Bitcoin goes down? It doesn't make sense. If Bitcoin is the future of currency, then you would naturally want to seek an alternative to the dollar, because it's inflation. It's not worth anything when you think about it. But when you go over to the dollar itself, you still got appreciation. You got purchasing power. There you go. Still look, 7.9, man. 7.9% appreciation, which is why you see the dollar going up. Bitcoin will go up. They're using the dollar's power at 7% appreciation, 8% appreciation nearly, to buy more Bitcoin with less dollars. All right. Looking at the dollar dominance, you might have a bit of a problem, guys. That red vector candle is a problem for us. And that could be the future of where dollar's going to end up, which could effectively be the future for euro. So just take that into consideration when you are looking at Bitcoin, ladies and gentlemen. Any questions? Whilst you get your questions sorted out, if you guys are trading, get over to BTCC, man, because, well, Coinbase is doing pretty well. Coinbase is pumped up. You can trade Coinbase on here. Those of you that would use BTCC, use it as a hedging platform, because you can actually trade the NASDAQ, the S&P. You can trade all sorts of stocks. Here, the tokenized stocks right here. Intel, Microsoft, MicroStrategy, Netflix. This is the NASDAQ, which is the Tech 100. So if those of you go want to trade NASDAQ, it's Tech 100 USDT. And of course, SPX is the S&P 500. But if you're in situations where you're trading Bitcoin and you want to try and take advantage of the speed of the move of the NASDAQ, I mean, you want to see how fast the NASDAQ moves? Just look at this. Look at how crazy it moves. Look at that. Absolutely madness. Moves way faster than Bitcoin. That's one thing for sure. So if you see Bitcoin not doing anything, which is what we've been seeing them do, get over and trade it on the big BTCC and exploit that volatility. You got news announcements for NVIDIA coming out soon. Open a position beforehand on NVIDIA if you believe that NVIDIA is going to do well. And then when the market does come out with the information, bang, you're already in exposure. Happy days. You won't be able to do that across one platform, but you can with BTCC. So go check that out. It's in the description of this live stream, ladies and gentlemen. Okay. Now, quickly going over into Bitcoin just for a split second, just having a look at NASDAQ right now. I can see NASDAQ's playing around with some very interesting ranges. It's been very, very tricky. Did make a little bit of a high earlier on today. I did take a trade on NASDAQ. I don't even know if you can see. It's just on my live account on Ninja Trader. We made $1,277 on scalping NASDAQ and the S&P this morning. But it got a little bit chaotic for me. So I was like, you know what, I'm not going to bother with it. And especially with what happened on Friday with the wild price action on Friday from Trump and the tariffs. But you can see that this is why it's hard to trade the depth of market. I don't encourage anybody new to trade the depth of market unless you've got yourself a little bit of experience trading, because the depth of market is a whole new world, guys, completely whole new world. And if you then become more and more proficient with the depth of market, you will never have to look at a chart again. You really won't. I've got all sorts of depth of markets. I've got the S&P depth of market right here. Okay, this is a jigsaw platform. I have the bonds markets right here. And I have, that was the ultra bonds. And this is the ultra bonds. And this is the 10-year bonds market. Look at the volume on the 10-year bonds market, man. It's absolutely wild. And then what I like to do is I'm going to be trading the bonds this week because of just the less volatility, but I can put down more size and take advantage of a few ticks profit. You look at the NASDAQ and the S&P, it goes shoots up, shoots down, and that's where you can effectively get shaken out from the manipulation that happens with the NASDAQ and the S&P. But in the bonds market, you ain't getting that manipulation, man. There's too many big boy players in there. And when you're buying 3,000, nearly 10,000 contracts on the bonds, my God, we're talking change here. It's a $137 trillion market. Of course it is. You know, so just take that into consideration when you are wanting to start trading and scalping, because that at its best is scalping. Depth of market is scalping right there. That is scalping all day, every day. It's a horrible, horrible environment if you're not trading properly. I mean, look, let me show you what it's like. All right, I'm just going to open a very, very small position because I'm not going to risk not too much. Where are we at? We're trading at the highs right now. Watch what happens to my exposure on this. Watch this. I've gone long on the NASDAQ. Look at how quick I have to be out to make a little bit of a profit. On the idea that the orders are coming in, marking higher. Can we make a quick profit? There you go. I'll take that $70 out. Okay, and we do that all day. We can do that all the time. But you've got to be in and you've got to be out. You can't be sat there holding, hoping into the dream it's going to keep going higher. Look, naturally, it can go higher. I can step back in again if I want. Quick scalps, get out. But at the start of a market, that is horrible to trade. It really is on the depth of market because, look, where's direction? It's shooting up and down, up and down. So anyone that does want to get involved into the depth of market, proceed with caution because you've got to really have... Man, I just want to say, you got to have balls, man. You really do. You got to have those diamond balls. Anyways, questions. Any questions? Any questions? What time is it? The market's open. Come on. You got any flavor for me? Tina, with vector candles, I was just grabbing your attention. How many camels? For God's sake, man. Bruv, really? Camels again. Where do you trade the bonds? I trade the bonds on Ninja Trader. The Ultra bonds, the ZN, the UBs, 10-year futures. That's this right here, ZNs. I'll be honest with you guys. If you're going to learn to start trading, you start trading on the bonds. Any prop firm, any hedge fund manager that's going to start teaching new people to trade, they're putting them on the bonds markets because they're less volatile. It costs less to actually open trades. And the margin is not as much as what you would need on the S&P and the NASDAQ. And you do... learn discipline with that. Okay. Here we go. Hold on. Let's quickly go back into it. What's your view on the 4 doji candles on Bitcoin daily time frame? No man's land, bull bears cooling off. Look, with regards to Bitcoin and that daily candle behavior here, okay, this is accumulation, all right, because there's orders in and there's orders out, buying and selling. And this shows you that some investors are short term. They just want to buy Bitcoin and then sell it. That's what they're looking to do, okay? And if you don't see the long-term commitment from investors, then the way you see long-term commitment is if each day's candle trades higher and higher. And that means people are retaining and people, of course, selling at the same time. You've got to remember that because, look, price, the offers are there, okay? So just take that into consideration. Do you think it's possible to see the volatility index shoot up to 30 with this tariff story? I think it can shoot up to 60. With the tariff story. It shot up to 100 during COVID, you know? So trust me, you can see that volatility. There's a guy that's betting that the volatility index is going to shoot to 180, you know? How do you shake 20K smack from the market? Average Joe trading. Listen, man, this is what happens. You lose money, man. I've lost money. I've shown you guys before. I've had days where I've lost 25 grand. I've had days where I've made 30, 40 grand. You know, it's part of the game, all right? Do not be married to what you've lost because it's done now. You can't do anything about it. If you can do something about it and go back in time and get that money back, then you've got a reason to complain about it because you're looking at the time delay thinking, well, how do I get back in time? But you can't go back in time. So fuck it. Leave it. It's done. That's the name of the game. You paid to play. What do you want me to say? There's no sugarcoating on a loss. It's done. You got to move on, my bro. And as brutal as that sounds, I can be really nice about it and be like, hey, man, sorry for the loss, bro. It's a bit of a problem. Fuck that, man. You don't want to hear that because then you're not going to take it as seriously if I'm being really nice about it. I've been there. I know your loss. Get on with it. You come into the hardest, easiest way to make money. No time for bitching. Don't get twisted. I've bitched before. Come on. I've got on these lads and be like, man, I'm not alien to it, bro. Trust me. I've been there. I'm with you on that. You got to park it and move. You know? How much money do you need until you quit trading? Again, look at all the big boys that are still trading in their 70s. Go and ask them, will they ever quit trading? They'll be like, well, I lost the idea of money back 30 years ago. I just enjoy the game. They enjoy the hunt. You know, when you start that mindset in the beginning and not focus on the money, you'll end up staying in the game longer. Any questions? Does Bitcoin have a big cup with handle on the 2-month chart, my bro? My days. 2-month chart. Let's go to the monthly candle. A big cup with handle. Well, you've got a cup with handle here. Breakout. Okay? But each month that's passing by, if you look, each month that is passing by, it's not successfully clearing each month. This candlestick was overcome by this one, okay? But this one couldn't close above this one. So that's a problem. Now, this candlestick is trading lower into what that was before. Now, all we need is this candlestick to try and finish higher than what this open was of this candle here, of the close of this candle right here. So basically, Bitcoin needs to get above 102,339. If it can't, order a taxi, right? If McDonald's are going to be doing good with their earnings, get involved in some applications because that's where we're all going to end up, all right? I'm telling you. Bitcoin can't clear that point. Boy, we're going to get into a very, very cheap Bitcoin. Especially with all the hype that's behind it and it's going down. Nah, I believe Bitcoin's just going to move lower a little bit, pick up some orders, and then shift out. Let's be realistic with it. But unless it gets above 102,000, you're going to have to then start reducing the time or expanding more on the time on how long it's going to take Bitcoin to go higher. All right. So you're going to say, all right, give it a little bit more time. I need to see it come down a bit more first, you know, before it can then go to the billions of dollars that they all want it to be. Which strategy from the Platinum PDFs would you recommend to study for someone who is new to the hybrid system? I'm going to give you this, and then I'm going to let you guys bounce, okay? So the hybrid system is 2 schools of thought, okay? Where you're talking about price action, and then you're talking about market maker methods, okay? Trader at home and Steve Murray market maker method. Combine the 2 together, you have the hybrid. But what aspects of the hybrid system are going to benefit you, all right? Now, I've created these PDFs for the Platinum members, and they all carry different strategies, okay? If you are new and you haven't done so, take this free course. I give you the criteria of what is needed to start understanding the patterns, okay? Right here. There's the rules. Follow them, right? Tells you how to trade the pattern, right? Now, if you want to, once you've done that and you've gone back, when you study this, okay, it's only an hour long. When you study it and then go to the charts and you get proficient at the W's and the M formations, that's when you can start looking at other structures like checklist V-shape part 3, okay? V-shapes. In my opinion, the V-shapes are the best trading method inside of the hybrid system for those of you who are patient and those of you who are not afraid to get involved when Bitcoin or any other asset is dropping. But it does take practice, okay? This breaks it all down what V-shaped reversals are all about. You have this at your side. You're looking at it. Have I got the criteria of a V-shaped reversal? Well, let me give you the criteria. We go into Bitcoin. On any time frame, ideally, you want to be looking at the 5-minute chart just to keep it safe right now, just to help you guys understand it, okay? So where is a V-shaped reversal on Bitcoin? I'll give you this. That right there is a V-shaped reversal on Bitcoin. Happy days. Criteria says that you need to have a move to the downside, and then you want to see green vector candles, blue vector candles coming into play, deviation away from the moving average. Look if it swept any previous Asian session lows and New York session lows, and has it recovered any other outstanding vector candles? Take the trade. But you think there's some magic sauce. You've got to take the trade to understand if what you are looking at is the point where price is going to reverse. You've got the structure, you've got the ideal, you've got the criteria, put it into the chart, take the trade, okay? By looking at the red vector candle making a move to the downside, you look at that and you say to yourself, well, at some point, they're going to try and recover that point. I'm going to take a long, okay? Go back again. Got another one right here. Bang. V-shaped reversal. Okay. Got another one right here. V-shaped reversal. Okay. Now, what I'm doing here right now is only going to help you if you do it. You have to go back in the charts and draw up as many V-shaped reversals that you can find. Because what you're doing then is you are creating an inventory in your mind of the variations of V-shaped reversals. Because a V-shaped reversal is a V-shaped reversal. It can go down and it can come straight back up. The makeup of a V-shaped reversal is going to be variable. You've got women that have makeup on their faces, but do they all put exactly the same makeup? No, but they still look pretty. They just use different things. The same thing with the V-shaped reversal. It looks like a V-shaped reversal, but is the makeup exactly the same? And by going back in the charts, trying to find the V-shaped reversals, you're then going to say to yourself, if this move that we're seeing to the downside, hypothetically, is going to evolve into a V-shaped reversal. And because you've gone back in the charts and studied the V-shaped reversals, you find that the ones that work well are the ones that start off with a vector candle appearing after the reversal has started. So look at this. The V-shapes that we just saw right there, out of those two, they didn't really have the vectors coming up, did they? No, but this one did. Look at that. There's a green vector candle right there. So when you've gone back in the charts and said to yourself, you know what? Every V-shaped reversal, I challenge you all to go back in the charts on the 5-minute time frame and draw 1,000 V-shaped reversals. And then tell me how you look at price differently when you come to the charts again. You'll be a little bit more structured. You'll be like, well, I've got to wait for a big move to the downside because granted, Bitcoin's going to do it. Okay? Once you get the move to the downside, you're going to see a red vector candle coming into play. You're going to be anticipating it's going to come back to that point. All right? And then you're going to be waiting for green or blue vector candles to appear at the lows. You're going to wait to see if price has stalled out at the lows to suggest it's going to go up again. All right? When you've gone back and drawn that many V shapes, okay? You then start to develop in your mind the criteria of what you need to see happening because it then becomes a habit of what to expect. You look at this and be like, oh, that's a little bit of a terrible V-shaped reversal right there. Took a little bit of a while, but it looks like a little inverted W form, head and shoulders W formation. Here we go. You got another V-shaped reversal right here. That could be a little bit of a tricky one. So you then know in the future, you'll be like, if I start seeing price stalling, still going down, but then it doesn't really make the V-shaped reversal, but eventually leads to a reversal, you're going to have that in the back of your mind saying to yourself, well, I've got to be mindful that if I start seeing this sort of behavior, okay, then it could mean that the V-shape might not happen yet, but it will happen later. I'm going to take a trade on that logic because I saw it happen before. That's what this is all about. The hybrid system is all about practice. Look at that for a V-shaped reversal. Fundamentally, that is a V-shaped reversal. Comes down and then comes up. Then as your experience develops, you're going to then say, you know what, I'm going to take advantage of when I see the first green vector candle that appears after price has dropped to the downside, which creates the first part of the V. Because what do you think a V-shaped reversal is, ladies and gentlemen? It's half of a W formation, ladies and gentlemen. So when you go and study the course right here, you've already got the basis of it. Become a platinum member, you learn more about the V-shape and the criteria from my perspective on what you need to look out for. That's the hybrid 101 in my opinion. With that being said, I hope that's made sense for you. But I challenge you, go back and draw your V-shapes and then tell me how you feel differently when you come back to the charts again. You'll be a little bit more structured with what to look for. Take care of yourselves, gang. Mad love and respect. And I'll tune into you all later on. Peace. I didn't blink.